Stocks and politics rarely mix, but this election cycle, there may be a trade. Currently, there's a correlation between the odds of a Trump election win and the performance of a particular stock by the symbol DJT. Of course, we're talking about the Trump Media and Technology Group. It's essentially a social media platform, also known as Truth Social. Now we can see here in blue, that's the performance of DJT stock over the past couple weeks. In addition, we can see the red line, which is ticking higher, the odds of a Trump win during this election cycle. Let's take a step back. This is not a trade recommendation. We love data. We just found this data to be very interesting. Please don't misconstrue this as a particular trade recommendation. For your information only. The options market can provide us with some insight to the stock's possible trend. It gives us information that is not always apparent on the surface by just looking at the stock. Let's take a look at some of the trades that occurred last Thursday. Now, we're not going to get too much into the weeds as far as option technicals and specific strategies, but just enough to explain what we're looking at here. A call option gives the buyer the right to buy a stock at a specified strike price within an expiration period. A put option gives the buyer the right to sell the stock. Essentially, we buy a call option if we think the stock is going to go up, buy a put option if we think the stock is going to go down. Let's go to the time it sales from last Thursday, and we can see something quite interesting here. Lots and lots of volume, a massive amount of contracts traded, for over 14,000 contracts traded. What we're talking about are the November 25 calls set to expire November 15th. It's important to note, just about a week after the election. And we can see the trade appears to represent a purchase as it was executed on the offer price. You see, we have the trade price, that's $6.48. And we have the bid offer at that time. It's $6.25 to $6.50. Well, when we see a purchase in the options market, typically the purchase occurs at the higher end of the bid offer. The trader has to cross the spread, so to speak. So the trade went off at $6.48, very close to the $6.50 offer. So we know it was a purchase. We can also take a look at the November 35 calls. And in this case, the trade appears to represent a sale as it was executed on the bid price. We're selling, we have to cross to the lower end of the bid offer spread, and that's how we know the 410 execution. The trade price went off very close to the bid at 405. Also, very important to note, both transactions occurred at exactly the same time. This is called a call spread. It also occurred with the exact same volume, so we know these two transactions were linked. And we can see here the actual call spread was a purchase November 25 calls and a simultaneous sell of November 35 calls. We're buying the 25s, we're selling the 35s. This is called a debit call spread. The maximum profit is achieved if the stock is at or above $35 by expiration. We can see, as of just the other day, the stock closed at around $24, a little bit higher since then. But the price target again for the strategy is around $35 between now and the election. Well, a week after the election. Is this an opening or closing trade? Maybe the trader already bought this and they're just closing it. Well, we look to the options time and sale, so to speak, and we can see here the volume. That's the number of option contracts that were traded today. We can also consider the open interest. That's the number of option contracts that already traded, that were already open as a result of the trades prior to today. You see, unlike the stock market, in the stock market, we just buy the stock. But in terms of the options market, every options trade essentially creates a contract between the buyer and the seller, or the buyer and the market maker, but there's a new contract that's opened every single time. So we look at the open interest, and that represents all the open contracts, all the options in that particular strike price and expiration that were purchased and have not yet been sold, that are still open. The volume in this case for the November 25 and 35 calls, around 52,000. The open interest 1,800 and 1,200 respectively. So we can see here, when the volume is significantly higher than the open interest, the transactions appear to represent new positions. The volume happens today. The open interest is everything that's happened up until, but not including today. Here's another example of a massive trade. We take a look back to the time in sales. We see, in this case, they're put options, very large trade size, almost 29,000 contracts traded. These are put options again. In particular, we look at the November 12 puts with a trade price at $1.41. The sell trade, which we assume this to be, executed at the bid price. The bid offer spread at that time was $1.41, $1.63. Again, it executed at $1.41, crossed the spread to the downside. So we know this was a sell. Conversely, the November 7 puts traded at 41 cents with the current bid offer 39.43. This occurred in the middle of the spread. The spread is 39 to 43. So how do we know it's a purchase? We don't. But considering that this is a spread that occurred simultaneously at the same time in the exact same volume, we can extrapolate from this. If the first side of the spread was a sell, the other side most likely is a buy. It's not a guarantee, but most likely. In this case, we call this a credit put spread, where we're selling the November 12 puts, we're buying the November 7s. This is another bullish strategy, by the way. We're expecting, if we take on this strategy, we're expecting the stock to go up. The maximum profit is achieved if the stock is at or above $12 by expiration. So you take these two strategies together. The call spread is, has the intention that the stock will go to 35. The put spread, which is less aggressive by nature, but it's assuming the stock will stay above 12 between now and expiration. Is this particular trade an open or closing trade? We go back to the volume. 40,000 contracts traded on these particular options. The open interest at the time, only 541 contracts, 1627 on the other. The volume is significantly higher than the open interest. Now, today in the news, DJT trading halted. As a result, there was a very quick sell-off in the stock, and then a recovery. It was only halted for a few minutes. We only mention this. It's a very volatile stock, so please exercise a tremendous amount of caution, whether if you choose to dip your toe into the options of the stock or any combination. We talk about this for information only. Please exercise a lot of caution. But is there anything else within the options market that may give us a hint as to the probable direction or the bias? We could again look back to the open interest. On the call side, take a look at the open interest. Remember, the open interests are all the options, in this case, call options, that were purchased and are still open. They haven't sold them. We have massive open interest, 40,000 open interest contracts on the November 25s, another 7,000 on the November 30s, another 46,000 on November 35s. The puts, very little relative option open interest, 6,400 on the November 20s, 4,900 on the November 30s, but other than that, very minuscule. You can compare the two, the calls on the left-hand side, puts on the right. The open interest on the call options are much higher. Now, of course, an option trader will tell you, they can also sell the calls, and that would create open interest. They could sell the puts. Just because we see open interest doesn't necessarily mean that they bought the calls or bought the puts, but most likely, I think most option traders buy as opposed to sell option contracts. Now, we do our best to really dig below the surface to find the message within the data that may not be apparent on the surface. We mention this because we want to talk about the fake jobs on Indeed. We spoke about this the other day. We actually launched a video, just a few days ago, reporting on the changes in the Indeed jobs data, and rightfully so. Many of our viewers indicated, listen, these websites, they're not so reliable. There's such a thing as ghost postings. There's such a thing as duplicate and fake job ads. We wanted to dig into the details. So we took a look at the Indeed's jobs data and we compared it to a government survey, which is known to be very reliable, the JOLT survey. And we found some similarities and we found some really stark differences between the two as well. And I think that you'll find what we discovered here to be quite interesting. We hope this has been helpful. We look forward to seeing you back soon.